There are many benefits to an FHA loan, including a lower down payment needed of 3.5%, lower credit score needed for qualification, as well as lower interest rates. My name is Matt McDonald from Premier Mortgage Lending, and today we're going to go over exactly what an FHA loan is and the positives and negatives of that loan. Let's get into it. To start the video, we're going to go over the general overview of what an FHA loan is. The loan is insured by the Federal Housing Administration and backed by HUD. So it's a government loan. Okay? It's a government insured loan. It's not necessarily a loan that's insured by a lender or by our brokerage. Okay? It's a government insured loan. It's best suited for applicants with a lower credit score. Okay, so ideally we're looking for higher than 620, but it's usually suited for the range of 620 to 680. That's the general range of who would qualify for this loan. Okay, and it's not meant to be a long-term loan. It's meant to be a short-term, and then you will end up refinancing into what we call a conventional loan, which we'll go over in a later video. Next, we're going to go over interest rates. As I said in the intro, the interest rate on an FHA loan is generally lower than that of a conventional loan. Hey, usually it's about 0.5% lower. Again, that's about a rough estimate, but that's kind of a good gauge to go off of. Okay, where the FHA loan, or where it offsets, is in the monthly insurance premium that must be paid. Okay, I'm sure a lot of you have heard of mortgage insurance, or PMI, for a conventional loan. Okay, FHA loan has a monthly insurance premium, and generally that amount is higher than a PMI payment that you would make for a conventional loan. So yes, you have a lower interest rate, but if you are going to go into this FHA loan program, you should know that the monthly insurance is going to be a little bit higher than that of the conventional loan. With the mortgage insurance, we have two kinds. Okay, we have an upfront mortgage insurance premium, which is paid at the closing table, of 1.75% of the loan. This can be financed into the loan, so it's not a huge deal if you don't have that cash on hand. But if you are able to pay that 1.75% and get that out of the way instead of rolling into the loan, you have that option as well. The monthly insurance premium is 0.85% of the loan, and again, that is paid monthly. So on that $100,000 loan, that would be a $71 monthly insurance premium every single month for generally the life of the loan. The only way that you don't have that monthly insurance premium for the life of the loan is if you put 10% down or more at the beginning. If you do that, you will then have the monthly insurance premium for 11 years instead of the life of the loan. With both of these premiums, everyone will pay. It does not matter what your qualifications are. If you have the higher credit score, lower credit score, more down payment, less down payment, everyone in the FHA loan program has to pay both of these, so there is no way around it. Next, we're going to go over the down payment needed, and then just a general overview of your closing costs that's needed for an FHA loan. The down payment needed is a minimum of 3.5%. Okay, the down payment can be gifted from a family member, okay, but you have to show the family member is not expected to get paid back that payment. So if they lend you, say, $10,000, we need to make sure that whether it's your mom, your dad, brother, sister, whoever it may be, is not expecting you to repay that. That way, we don't have to put that into your debt-to-income ratio. Okay, the closing cost, roughly speaking, is going to be your broker fees, plus your title fees, plus escrow payments, plus your upfront mortgage insurance premium. Okay, there's a lot there. The big things there are going to be that the escrow payments is only there if you plan on opening an escrow account through us. That will change state to state on how much you owe. For Massachusetts, generally we take 4 months of escrow payments because the taxes are paid quarterly. If you're buying in New Hampshire, we take 6 months of escrow payments because they are collected twice a year in New Hampshire. Also with New Hampshire, we have something called a transfer tax for real estate, but we'll go over that in a later video. Just out there so you know, if you're buying property in New Hampshire, there is an added fee at closing. Okay, next is just simply the property requirements for an FHA loan. It must be your primary residence, which means you have to live in the property for 1 year after you close on that loan. Okay, an investment property is not allowed, so you cannot buy an investment property with an FHA loan. So again, that's important to note. You cannot buy an investment property with an FHA loan. With that being said, house hacking is allowed. General overview of house hacking is you buy a 2 to 4 unit home, you live in one unit, and you rent out the rest of them. Okay, that is allowed. Since that's not considered an investment property, it's considered your primary residence. Okay, finally, with this, condos are just required to be approved before we get a yes or a no on the FHA loan being allowed. Next, just quickly, we're going to go over the loan limits. There's a lot of numbers on this slide, but we're just going to mainly focus on the 1 unit because that's where a lot of people are really going to fall under. Okay, in a low-cost area, 1 unit will be $356,362. That is the max that we can lend to you in that low-cost area. In a high-cost area for the 1 unit, we can lend to you $822,375. Okay, these areas are determined by the Federal Housing Administration, and they change year to year. Sometimes they go up, sometimes they go down. From 2020 to 2021, they actually went up a little bit, so you could possibly qualify for more or be lended more money. Next is going to be qualification standards. We're looking for a 2-year consistent work history. Okay, it is okay if you change jobs within the 2 years. Okay, really, we're looking for you to work in the same field. If not, again, it's not a huge deal, but it's just going to require some more documentation if that is the case for you. The debt to income ratio that we're looking for is about 57% or less. Again, the lower that is, the better for you. And then a credit score is ideally over 620. In terms of refinancing, there's 3 ways to do so with an FHA loan. Hey, we can do an FHA Streamline refinance, which is your typical rate and term refinance for an FHA loan. Okay, the biggest difference with this between a regular refinance for a conventional loan and the FHA Streamline is there's a lot less paperwork that's required. We generally don't need an appraisal, okay, so that's just one less step that we need. So it's a little bit easier to go through the process for an FHA Streamline refinance. You can refinance to convert to a conventional loan. Okay, that's not like a proper term, it's just a way that we can refi your FHA loan. This will require a higher credit score because you do need to meet the conventional loan requirements, but it does remove that monthly insurance, mortgage insurance premium that we talked about before, so it will save you a ton of money per month and then possibly a lot of money over the life of the loan. Okay, and finally, we have a cash out refinance, which is when you use the equity in your house to pull out cash. Okay, we'll go over that again in a later video. With a cash out refinance, you can actually get a check at the closing table for a certain amount if you want to do home renovations, if you would like to pay off any debt, if you'd like to save up for maybe a kid's college fund, anything you may do, even if it's just to create savings buffer in your savings account. Whatever you choose to do with that money is obviously up to you, but there's a lot of reasons that we could do a cash out refi. So that's a general overview of an FHA loan. Hey, if you have any questions, again, my name is Matt McDonald from Premier Mortgage Lending. My number is 603-475-5471. My email is mmcdonald@pmohomeloans.com. I'd love to answer any questions that you have, possibly get you started on an application. Thank you.